Hello everyone, welcome back to our channel. Today, we're diving headfirst into the treacherous waters of the US stock market, reliving 5 of the most bone-chilling crashes in history. Buckle up, because these weren't just your run-of-the-mill dips. We're talking about the kind of sheer drops that make your stomach churn, the kind that send shockwaves across the globe. From the roaring 20s to the age of the internet, we'll dissect these market meltdowns, uncover the culprits behind the chaos, and learn how to navigate the stormy seas of investing. So grab your hard hats and let's get started. Let's rewind back to October 29, 1929, shall we? A day etched in the memories of investors as Black Tuesday. Picture this, the Roaring 20s, a time of unprecedented economic prosperity, jazz music, flapper dresses, and an unquenchable thirst for speculation. But beneath the surface, a storm was brewing. The market was riding high on margin buying, with investors borrowing heavily to chase returns. It was like a game of musical chairs, and when the music stopped, well, there weren't enough chairs to go around. The Dow Jones plummeted a gut-wrenching 12.8%, wiping out billions and ushering in the Great Depression. It was a financial hangover of epic proportions, a stark reminder that what goes up must eventually come down. Fast forward a few decades to October 19, 1987, Black Monday. This wasn't just a crash, it was a full-blown market massacre. The Dow Jones nosedived a record-breaking 22.6%, making Black Tuesday look like a picnic. So what triggered this freefall? Some pointed fingers at program trading, those fancy computer algorithms designed to buy and sell stocks at lightning speed. These automated systems went into overdrive, selling frantically, and creating a domino effect that sent the market into a tailspin. It was a harsh lesson in the perils of technology and the importance of good old-fashioned human oversight. Now let's talk about the dot-com bubble, a time when the internet was the Wild West and everyone wanted a piece of the action. Remember those heady days of the late 90s? Companies with .com in their names were more valuable than gold, even if they had no profits, no revenue, heck, sometimes not even a real business plan. It was pure, unadulterated speculation, fueled by the promise of riches in the digital frontier. But the party couldn't last forever. Reality set in, the bubble burst, and the Nasdaq, the darling of the tech world, crashed back down to earth, taking countless investors down with it. It was a classic case of irrational exuberance, a stark reminder that not all that glitters is gold, especially in the fast-paced world of technology. And then came 2008, a year that will forever be seared into the memories of investors. The financial crisis, triggered by the collapse of the subprime mortgage market, was like a house of cards collapsing in slow motion. Remember those exotic mortgage-backed securities? Wall Street's fancy way of packaging and selling risky mortgages? Well, they turned out to be ticking time bombs. When the housing bubble burst, it triggered a chain reaction that brought the global financial system to its knees. Lehman Brothers, one of Wall Street's titans, crumbled, sending shockwaves across the globe. It was a stark reminder of the interconnectedness of the global economy and the devastating consequences of unchecked greed. Fast forward to 2020, and the world was hit by a different kind of crisis, a global pandemic. COVID-19 brought the world to a standstill, shutting down businesses, grounding flights, and sending markets into a tailspin. The Dow Jones plunged, erasing years of gains in a matter of weeks. Fear and uncertainty gripped investors as the pandemic raged, exposing the vulnerabilities of a hyper-connected global economy. It was a stark reminder that even in the 21st century, we are not immune to the forces of nature. So, there you have it, 5 of the most unforgettable stock market crashes in history. From the Roaring 20s to the COVID-19 pandemic, these events have shaped the financial landscape, leaving an indelible mark on the world. But amidst the wreckage, there are valuable lessons to be learned. These crashes remind us that markets are cyclical, prone to bouts of irrational exuberance and fear-driven panic. They highlight the importance of diversification, risk management, and a long-term perspective. And perhaps most importantly, they remind us that history has a funny way of repeating itself. So buckle up, because the next crash might be just around the corner. If you want to learn more about how to navigate the treacherous waters of the stock market, hit that subscribe button and ring the bell for notifications. Until next time, Keep your heads up and your portfolios diversified.